Wednesday, April 14th, 2021, Monaco 64, home of alternative economics and contrarian views. Today we're going to look at why, in my opinion, a global reserve currency, a new global reserve currency that replaces the dollar, and that might even have the dollar as a basket in it, needs a gold anchor to it. I don't think it will have any credibility in the long term if this new global currency that I hear a lot of people talking about, that the reset is very close. Yeah, I don't think it would work because it would still leave an even worse institution, the IMF, the World Bank, the UN, in charge of monetary policy. It would be even more far away from the general public's consent, and they would be able to inflate it even more out of thin air. Unfortunately, I don't think they plan to anchor the new global reserve currency with gold. They know that gold really puts a straitjacket on the bankers, on politicians. It's sound, honest money. Do you really think these people are honest? I don't think so. And that's why personally, I think that gold and silver are going to continue to be my reserve currencies for many years to come. And I think it should be the reserve currency of people who know what's going on for generations to come. And I could be wrong, and I hope I'm wrong, actually, because it would be a lot better for the world if we had a gold anchor, if the money was sound. Some people are concerned about having a global currency. They think it's a bad thing. Yes, it is a bad thing if it's not denominated or fixed in a weight of gold. And why is that? Well, yeah, because like I said, you'd have supranational unelected officials deciding, running the world basically. But with the gold anchor, that would be very different because in an ideal world, we would go back to the period before the early 1900s, where there were no international institutions like the BIS, like the IMF, like the World Bank, like the League of Nations. People would do business freely across borders, and they would use gold, silver, whatever they wanted to in terms of money or currency, something that was valuable, that would be valuable. Unfortunately, I don't see us going back to that period. It would be a great thing. It would be a decentralized world. It would be a world where you can go wherever you want and take your capital, your gold, your silver, or whatever. Some people think that the blockchain, the digital currencies, is a way to decentralization, but I'm not too convinced. I saw a video yesterday. It was looking at body language, and I'll put that video up in the cards and below in the description. And what worried me about that is that you had a huge Bitcoin cryptocurrency proponent, Raoul Pal, and you had someone from the World Economic Forum from Davos in the same interview agreeing with everything. So do you really think the powers that be, the World Economic Forum, the IMF, the World Bank, because you have to understand the World Economic Forum is a think tank for the globalists, and to have someone who's a huge proponent of the blockchain cryptocurrencies be kind of agreeing with someone from the globalist World Economic Forum is worrying for me. So I'm not too convinced that cryptocurrencies are going to decentralize things either. We will have to see. I hold judgment for now, but it doesn't look good. So yes, that's how I see it. We need a an anchor. And by an anchor, I mean that, let's say the SDR becomes the global reserve currency. And you personally, anywhere you are in the world, you wouldn't be using SDRs to pay for things. You wouldn't have SDR banknotes. SDR would just be the reserve currency for sovereign nations. And it would be weighted by the dollar, the euro, the pound, the Japanese yen, the renminbi, and a few other major currencies. And right now, I think $1 is about 0.7 SDRs. So they could come out with a rate, and they could do it just like at Bretton Woods, where they would say if a country has $35 of paper dollars, they can come to the US Treasury and get an ounce of gold. Always an ounce of gold for 35. The price is fixed. The fiat currency, the currency that is supposed to be backed by gold, to float versus an ounce. It's like having a meter or a yard. We always measure it the same way. You can't keep changing the measure. So yes, it would be important if they were going to have a gold anchor to set the right level. They would have to set the right level, of course. The ideal thing would be, of course, just to use gold as just like gold grams and have no dollars, no euros, no renminbis. But that's not going to be done. And in my opinion, that's just a no-no. So there you go. That's the way I'm looking at it. I would still hold on to my gold and silver. I think, yes, the price will have to be a lot higher for a reset to happen. What that price will be, I don't know. But I've spoken in the past that a Dow gold ratio at 1-to-1 would be a good indicator of the reset having taken place. Yes, we're very far away from that right now. But we could get there. It's possible. We were down to around 6-to-1 back in 2011. Right now, I think we're around 19-20. I'm not too sure. But how that's going to play out in terms of prices, I don't know. But I think the ratio will be 1-to-1. The other thing you need to look at maybe is that in 1980, that was like the last reset, really, and the market reset the system back then. You had the Fed's balance sheet become more than 100% backed by gold. So when gold went up to almost 900. So that's another indicator to look at, I think. And yes, the SDR, unfortunately, I don't think is going to have a gold anchor. They might reset gold a lot higher versus the SDR. And how will they do that? Well, indirectly, because the SDR is a basket of these fiat currencies. So yeah, that's how it will happen. If countries accumulate a lot of SDRs, they should be able to, in a perfect world, to go to the IMF and say, you know, I want my gold, my fixed weight or amount of gold for these SDRs, just like they used to do it for Bretton Woods, but with the dollar. We'll have to see. I'm not too optimistic about that. So we're going to look at the markets this morning now. Just before we do, just wanted to show you, because I've been talking about this teacup formation in gold. And I also spoke about the fact that I thought we made a bottom, was it a week or two ago, maybe more than 2 weeks in gold, that there was a double bottom. And also I looked at a candle formation in gold, and that bottom was around 1675. I thought that was the bottom. And this individual here, North Star, at North Star Charts on Twitter, if you want to follow him, he looks quite interesting. He sees this teacup as well, and he's looked at the stochastics and RSI here, and he thinks we are near a big bottom. And I agree with him. And don't forget, this chart here is probably a weekly chart, I think, or it could be a monthly chart. So this is not going to happen today or tomorrow. This will take a few weeks, maybe a month or two. But I think gold has bottomed finally in the paper price. So I thought this was interesting. This corresponds to the way I've been thinking about the technical picture. The other thing I wanted to note, yes, the silver situation in Australia with the Perth Mint there's still a lot of goings on over there. It seems to me that the Australian public is getting a bad deal. They want to get their physical silver and they can't. Even though this has nothing to do with silver, I just saw this yesterday from Tavi Costa, and he just put this chart up of Australian monetary base. Amazing, isn't it? I mean, if that isn't inflation, I don't know what is. So here he goes. He says, meanwhile, almost 100 billion Aussie dollars was printed in 2 months. So 100 billion is quite a lot for Australia. It might not sound a lot for the United States, but it's a much smaller country. I think the population there is, I don't know, 25 million or 30 million. So it's a tenth of the US population, let's say. So that's like a trillion, isn't it? If you look at it in US terms. The other thing I saw yesterday that I thought was interesting, because yesterday I made my video in the morning and I went to play golf yesterday. I had my first match of the season. It was a match play, a knockout, and it was the first round. And I'm happy to tell you I won. I played quite well. I had to give this my opponent 10 strokes because his handicap was higher than mine. But I won on the 14th hole, which is a good win. So, and then I came back and I looked at these numbers. I saw that gold had rebounded quite well as well, and silver. But yeah, if you look at the UK data from yesterday, you had the GDP year on year. It was expected to drop by 7.3 and it dropped by 7.8. So it was worse than expected. So was the month-on-month data. It was expected to grow by 0.6 and grew by 0.4. Construction output as well dropped by 4.3, is expected to drop by 1.9. So it looks like the UK economy is not doing well at all. Yeah, industrial production was a little better than expected there, year on year and month on month, as well as manufacturing. And then the number, the statistic that really caught my eye was the trade balance. As you can see, it was expected to be a 10 billion deficit, trade deficit, and it came out at 16.4 billion deficit. And yeah, that's quite a big trade deficit. The pound seems to be doing okay, but I think that's a bad sign. The trade balance non-EU was pretty bad as well. And why is that bad? Well, because the more of a trade deficit you have, the more weight it puts on the GDP calculation. So I don't think those are good numbers. That's the UK economy, not looking great in my opinion. A lot of people expect now with the economy reopening that people are going to go out there and spend a lot, and they might well do. But I think there's still a lot of unanswered questions about the furlough scheme, the people who are still in furlough, whether they're going to get their jobs back, the forbearance for mortgages and things like that, how it's going to work, all the bounce back loans to businesses. There's a lot of fraud involved in that. I don't think the banks are going to go after these loans. The governments are going to have to basically take all the losses, and that's you and me, the taxpayer. So I don't think things are great at all in the medium to longer term. So with that, let's quickly look at where the markets are. It's 8:25 a.m. London time. Right now we've got spot gold at 1744.50, down about half a dollar. The high's been 1749.70 and the low 1740. Last week, yeah, we tested the midpoint of the double bottom, which was 1755 or thereabouts. We went up to almost 1760. That's still a key level. Silver was encouraging yesterday because it outperformed gold. Right now it's up 10 cents, up 0.5%. So outperforming a little bit. 25.42, the highs 25.54 and the low 25.29. The Dow futures up 6 points. The Nasdaq 100 futures up 6 as well. S&P future up 3. The pound is up 0.33% at 137.96. So yeah, we hit that 136.60 a couple of times and it's rebounded off that level. So right now the pound's holding, but I'm not too sure about the longer term picture. The euro is up 1/8%, just below 119.70. The dollar is down slightly versus the yen at 108.97. And the dollar is down slightly as well versus the yuan. It's at 653.70. So we've come off a bit. I think we were around 656 yesterday. High grade copper is up 0.5% at almost 406. So it looks like that 4 level is holding, is a good support there. WTI crude is up 1% at 60.85. The 10-year yield dropped quite a bit yesterday. The 30-year bond auction went well. So yeah, I did a video last week about all the supply that's due to come out in the last three weeks of April, and that it could be a problem. Right now, it looks like the market is getting over that hurdle, but we still got more supply to come in the next few weeks. So we'll have to keep an eye on that. The 10-year yield right now is at 163. I think we got to around 170 yesterday. So all pretty calm right now with the bond market. The other thing I like to note is that I've noticed there's a lot of geopolitical tension. Usually don't go into politics or geopolitics, but it is a bit of a concern, even though a lot of it is theater, I would say. But keep an eye on the Ukraine, the U.S. Navy going up to the Black Sea and Crimea, Russia, and maybe even Taiwan. It looks like the neocons are firmly back in charge in D.C. and they want to create havoc in the world, unfortunately. So we'll keep an eye on that. If you enjoyed this video, make sure you hit the like button. Please share it far and wide. Think about subscribing to my channel if you haven't yet. And you can also follow me on Facebook, Twitter, and all these other platforms below here. I wish you all a great day. Take care. Bye.